Instagram. Let's see if this will work. I need to figure out a way just to get this all moving at the same time. There we go. Okay, I think we're live. All right, we are live. YouTube, Instagram, TikTok. We have Mortgage Dad of 3 in the house to talk housing market cycle. Josh, how's it going?
Good, man. How about you?
I'm good. I'm doing good. I mean, hey, I had a small cap jump 330%, so I was able to take a little bit of profits, and I'm going to buy more crypto as it tanks. So I'm good.
Buy the dip, bro.
Buy the dip. You gotta take your profits. Now, hey, today we're gonna talk a little bit about the housing market. I'm not an expert. Josh is an expert, and to start off a little bit, let's go with what is brewing. What is brewing in the housing market, Josh? What the heck is brewing? It seems like I hear there's gonna be a housing boom. Prices are gonna go, crazy, and then I hear there's gonna be a crash. I have no clue. Let us know what's
Yeah.
going on.
I mean, you really don't know what's going to happen, but I can tell you one of the biggest problems or one of the biggest hurdles for there being a housing market crash is a lack of inventory. That has been the overlaying census with just about everybody I talk to. There are no homes for sale. There's no homes coming on the market. And without more inventory, we're not going to see prices drop. We really haven't seen a huge flood of foreclosures. Um, Nobody really wants to move, sell their house that they have their 2% interest rate on. There was a statistic recently that showed boomers, 75% of boomers are planning on staying in their home until they die. So the golden wave that we had kind of counted on for boomers deciding to sell their homes and downsize, move into care facilities, you name it, isn't doesn't look like it's going to happen. So we're missing a lot of resale homes in the real estate market. New construction, they're pretty optimistic about what's going on just because they don't have any competition. So they're able to go in, build their homes, sell them quickly, and they're not left with a lot of inventory because there's not a lot of competition for them. So without a large flood of inventory, we're not going to see home prices crash anytime soon. And as far as home prices continuing to rise, I don't see how that happens. You know as well as I do, and just about everybody else. It's the affordability issue in the United States is insane. I think the numbers were an average or the median income of $60,000 a year could afford a house 4 years ago. Now it's about 120 to 140,000 household income to be able to afford a mortgage in the United States now. So without some sort of change in interest rates, drastic change in interest rates, or drastic change in prices, we're not going to see too many people being able to afford to buy a house. So pulling demand down isn't going to drive prices up any. I think the one thing that we've noticed here now for the last 6 months, as interest rate rose towards the end of last year, it was a giant stalemate. There wasn't a lot of homes being sold. There wasn't a lot of homes being moved. January comes around, interest rates start to fall. We see a huge uptick in applications, people wanting to become homeowners again. And for about 2 months, we saw, a normal, healthy market with a lot of demand and a decent amount of supply. So there were homes being sold. And now, come March, interest rates have ticked back up, and you're seeing a lot fewer people wanting to apply and become homeowners because of the cost. And so I think, and the other piece about that it goes hand in hand with that is just another issue is the NAR lawsuit, the uncertainty as to how buyers agents are going to get paid. We're going to see a large number of real estate agents leave the industry because they're not going to be able to cut it with the new rules, even though we don't know what the new rules are. So until that plays out, we're not going to see a lot of homes being sold either because there's no clear path forward for real estate agents negotiating contracts and giving us the ability to move homes.
Okay, tell us a little bit about the what is it, the NRA
NAR, NAR.
NAR. Okay, NAR lawsuit. Tell us a little bit about that because I saw that and I was like, so what? I'm confused.
All right. So, I mean, basically, what's happened is there's been a collective group of people who've gone and sued the National Association of Realtors, along with several large brokerages, and those keep rising. There's more and more lawsuits coming, and those lawsuits basically claim that NAR and the brokerages and the real estate community have created a monopoly, and that monopoly is basically setting prices in the market because of the way they do their commission structures or their commission plans. And so the courts have said it's a monopoly. You can't do this. You can no longer, set the commission for the sale of a home all on the hands of the seller. And so when NAR tried to settle the lawsuit, they basically said, "Here, we'll pay millions of dollars. Um, and our resolution for what you're saying is our monopoly is they won't be able to put what the commission is from the seller on the MLS because the MLS is the only place where most of the data and information is stored and collected for any real estate transaction." And the court said, we don't accept that. So the courts still haven't said how this is going to play out. There's no real path forward because at this point they've denied the settlement just because the settlement didn't take care of the issues that the court sees with what NAR and the brokerages have done as far as the 6% commission or whatever they negotiate. And so until NAR and the brokerages can come together for some sort of agreement that would appease the courts, there's right now the way it stands, a listing agent can't negotiate a comp and then share that comp with the buyer's agent. So buyer's agents are going to have to do a little bit more work, do some sort of buyer's agreement initially with the buyer. And if the seller is not willing to pay the buyer agent their commission, the buyer is going to be responsible for paying the buyer's agent the commission.
Okay, so in the past, the seller would pay the commission.
Yeah. So basically, in the past, the way it worked, you listed your house. When you listed your house, you signed a listing agreement. That listing agreement said you would pay X% of the sales price to the listing broker. And then the listing broker would create some sort of co-op or negotiation where that percentage or basically a percentage of that would be split with the buyer's agent who brought the buyer to the table.
Okay, so it sounds like it just plugs things. It sounds like it just plugs things up a little bit.
It does. And I mean, and we talk about affordability, we were before we came on camera, we were talking about how Biden's planning on doing some sort of credit for buyers to buy more houses. So he's increasing demand. That's not the issue, right? Affordability is really the issue. And if you're now saying that the buyer's agent can't collect a commission from the listing agent or the seller, and now that is the responsibility of the buyer, and you're talking about people who are buying houses with zero money down or small down payments, who don't have large amounts of money to be paying for a down payment and closing costs, and now couple that with a commission. Obviously, the buyer's agent's going to probably have to come down on how much they charge for their commission, but you're adding more cost to the buyer to buy a house, which isn't helping affordability.
Okay. Wow. So a lot of these policies are just not helping. So you'd say the biggest issue right now in the housing market is a lack of supply, increase in inventory. None of these policies are actually contributing towards that, correct?
Correct.
Now, what was the whole golden baby boomer?
Golden wave?
The golden wave. Can you explain a little bit how that narrative was supposed to go and then how it's actually going?
Yeah. So, I mean, basically, economists look at things like the data as far as age and what typically happens at that age. So the consensus with economists were as the boomers aged out and got to a certain age, they would be less likely to hold on to those family homes that they had. So the 4-bedroom, 5-bedroom, whatever size house it is, it's too big for them, and they want to downsize. They want to get something smaller that's easier for them to maintain, costs a little bit less, and can retire in something that's a little bit smaller. And in the past, that's how it worked out because typically, you could trade down and get a lower payment, get a lower cost of living. The issue is that these boomers went ahead and owned a house before the pre-pandemic, and got a 2% interest rate. So their payment is ridiculously low because it's on 2 or 3%. They may even almost have it paid off. So they're looking at it from a standpoint of, why would I move out of this house into something where I'm going to have to pay more, um, and deal with that. I'm perfectly comfortable living in a bit too big of a house for myself, because the cost isn't too high for me. And so you're seeing a lot of the boomers deciding, look, we're not going to be a part of what's happened in the past, and move down and sell our house. So without the large number of boomers who own real estate willing to sell their house, we're not seeing that inventory hit the market. So we're not seeing the resale market increase like they had hoped. You couple that with the fact that, again, looking at the economics of it, household formation, somewhere between the years of 25 and 33 years old is usually when a household is forming. And household formation is, you get married, have kids, and buy a house. Um, there's a huge number of that population, who can't afford to buy a house. They would love to. They'd love to start their family. They'd love to buy a house, but they're not able to. So you're seeing that demand not increase as much as they had hoped it would, albeit it's still there. It's just not as much as they had thought it would be. So you've got not a lot of inventory hitting the market because the boomers aren't willing to sell their houses, and a lot of the household formation age, the millennials, the Gen Zers saying, look, we can't afford to buy a house, we're gonna figure out something else out.
Okay. What would you say the answer to this issue is, or the closest thing to the answer? What do we need to see happen?
More housing.
More housing, lower
Yeah, I
rate?
mean, honestly, I don't think the answer is lower rates. um, I think truly the issue is, we've built an infrastructure in the United States that's largely dependent on vehicles, and single family homes and urban sprawl. I think the answer to it is building, um, more uh, more multi-unit properties, um, selling them as individual units, giving people the ability to own a property, but not necessarily building these giant single-family homes, building starter homes, small. And I use the word condo, but I mean more just like the high-rise apartments that you can purchase, that kind of thing. Building a little bit more of the denser populated housing, I think, is the answer, because you can bring prices down with those. You can make affordability less of an issue, and you don't have to change too much of our infrastructure to do that.
Okay, so by building a
Zoning.
small zoning, building a smaller house, not a smaller house costs the builder less, so they're not gonna have to spend so much, but also it's gonna increase that demand a little bit because people can actually afford it. Getting those incremental payments a little lower, and then if
Yep.
you so happen to get rates lower to some degree, whenever it is, then you get that influx because nobody really needs a gigant. I've lived in an apartment for a while. I go to my friends or uncles with big houses. I'm like, dude, this is a lot of cleaning. I was like,
It's a
it's a
lot of
lot of
maintenance, bro.
a lot of maintenance. And if you want to travel, if you're trying to travel and do other things, it's kind of just sitting there, right?
Yep.
Unless you're going to get a house to have other people rent, then that kind of makes sense. So sounds like they just need to restructure how they're, building houses to get lit. And I have a lot of friends too, a lot of people who are like, I'm going to get a trailer. I'm looking into small housing because it's kind of irrelevant. That does make sense. Okay. So what about that Biden housing credit? I saw what was it, minus, there's a catch to it from what I've seen. You're saving about $400, I think, a month, but there's some type of catch. I don't know if you heard about this. Somebody, Meet Kevin, was talking about the catch is you can't resell your house within 3 or 5 years, and you can't, there's a cap on how much you can actually sell it for. Are you familiar with this?
I'm not. I haven't done too much research on it. I have to look at it, but I
Okay.
mean, that's any sort of government program designed to encourage people to buy houses with some sort of credit. Most likely, it's a lump sum, and they're using that to then calculate how much of a monthly savings that is, but it's not actually a monthly savings because they're not going to come in and say, hey, your mortgage payment's $400 a month for the next 5 years. So most likely it's some sort of tax credit, some lump sum that you're going to get towards being able to, reduce your tax liability, or a refund. I mean, God knows what it is. But at the end of the day, it's just money that they've amortized over that period to say, look, this is how much you're saving if you use this program. But most of them are going to come with catches like that because they don't want people to use it and benefit from it, in the sense that they want them to manipulate the system, turn around, flip the house, make a buttload of money, and not have to worry about the consequences of also getting money from the federal government.
Okay, yeah, that makes sense. There's
Strings attached.
always strings attached, 100%. To me personally, I think they're gonna have to cut rates, and we'll move on to that. I think the Fed cuts this summer, and I know it doesn't look optimistic because inflation ticked to 3.5, but I think the Fed believes or knows, because something in the minutes showed that there's actually some bigger real estate issues actually taking place. I don't know what regions they are. My guess is something is actually cracking here. You called it. You said by summertime, something's actually cracking beneath the hood. Now, does that impact the entire economy? We might disagree on that. I don't think it does, because I think,
It
again,
can.
we just get bank term funding program, bloop, more stimulus. But when do you think the Fed actually cuts? Or because they're gonna have to cut. I mean, it's kind of political. Tell me about what you think about Fed cuts. When, why?
Well, I mean, obviously, you've got lots of different theories about this. I think I was watching something the other day. O'Keefe had done one of his undercover investigations, and the lady was talking to on a date with one of the people that work at the Fed, and he was talking about how Jerome Powell wants this to be about his legacy, how he stood the line against people like Trump, and he doesn't want to be looked at negatively as a Fed chair, like some of the past. So he's really worried about his image. So I think if the economy looks like it's going to break and he has to, he'll cut rates, because again, he doesn't want to ruin his legacy as the Fed chair. But I just don't see how a rate cut's going to save us in this instance. Um, because at this point, I think it might be a little bit too late. They're going to have to try to do something else. I wouldn't be shocked if you saw quantitative easing before you saw rate cuts.
Okay. Okay, so you believe something definitely is brewing in that
Oh,
inflation.
definitely.
Okay, are you seeing stagflation, which is to the audience basically inflation continues higher, growth falls apart? Are you seeing stagflation to some degree?
I mean, in my opinion, it looks like the jobs numbers may be skewed a little bit because of part-time jobs, because of government jobs. I think the unemployment numbers staying low because a ton of people are leaving the workforce. So I really think the economy isn't doing as well as the numbers show. And obviously inflation has been sticky, and it hasn't gone down to where they wanted it to, but we're not talking 9% inflation, 10% double digit inflation like we were talking about in the 80s. But I do feel like there's a real risk for stagflation, and here's why, right? The Fed decides, look, the economy's starting to break, we need to cut rates. They start cutting rates, inflation starts to rise again. You have all of the other pressures outside of it, oil, you know, wars, everything going on that can cause inflationary pressures, government spending, trying to do policies like tax credits for home buyers. More and more government spending, you're going to put pressure on that inflation. So we see inflation rise, them cutting rates, inflation rising, and the economy starts to show its true colors, where we start to see the unemployment number rise, and we see job loss instead of job growth. There's too much going on politically and economically, to really know how this plays out. But there's a lot of things that are happening that are setting the stage for some pretty bad stuff as far as stagflation is concerned. Because I mean, just look at the minimum wage for fast food workers in California. There's a
Mhm.
policy that is going to ruin the fast food industry in California, especially for the workers. You've already seen companies like Foster Freeze completely shut down all of their branches in California because of it, because they can't afford the $20 minimum wage. Um, a lot of the fast food restaurants in California are moving towards automation. I think I was at Jamba Juice the other day. Walked in to place an order for me and my kids, and when I walked in, they said, "Go ahead and just fill out your order on the kiosk." So nobody helping me at the cashier anymore. There's two people working at a Jamba Juice, just filling orders. So I ordered everything on the kiosk. They filled the orders, came out. I mean, even filling those orders could be considered a job that automation could do. So as we do that, we see job losses, more and more people not having jobs because of fast food and those kinds of policies. So there's just a lot of building blocks that are being laid that could cause some serious issues in the economy and bring on stagflation.
Okay. Okay, I can see that. I mean, automation in some degree, I always say a lot of the corporations are going to find a way to make money. They're going to find a way to make profits regardless. And so there is going to be job loss. And how do you solve that? How does the government typically solve that? Well, more welfare checks. And if that's the case, direct checks is inflationary. So they're probably going to have to use that Fed Now system where it's like you can only spend this much on these groceries. Now you're stuck in the system.
Yep.
And I don't know, stagflation, that'd be literally the worst case scenario. I think, the worst case scenario for me is we're seeing the Middle East right now. Iran is threatening an attack. And if that does happen, if you get those supply chains, stopped up again, that'll be terrible. That'll be even worse than minimum wage going up because that's immediate. That's immediate.
Yeah.
All your services go up. All your Amazon orders are going to go up because the cost of transporting them is going to go up. So I was hoping we wouldn't get to that, but we are seeing the dollar spike at the moment, and that's typically a strong spike in the dollar is a red flag.
It's
If
an
it
indicator.
climbs,
Yep.
yeah, if it climbs a little bit, hey, but when it spikes, something is up.
Yeah.
We're seeing energy, gold up at the same time, and
Flight to safety.
the gold bugs love it. They're like, we told you, World War III is here.
Yeah.
We'll
No, I
see.
mean, anytime you have world conflict, you see the flight to safety, the writings on the wall. Like you said, the dollar spiked, gold spiked. When mortgage bonds should be tanking right now, they have actually improved a little bit today after tanking yesterday and the day before because of the jobs numbers. Um, or inflation numbers. It just shows that that there's a really big fear that there's something big coming on the world stage. And whenever you have a world conflict, typically the investors are putting their money in safe havens.
Right. Okay. All right. Well, let's go back to the immigration thing because this always tickles everybody's pickle a little bit.
Woo-hoo-hoo! That is not a hot topic at all, my friend.
I knew people would get a little strung up on this. So,
It's going to be a
okay.
nuke for a lot of people this year.
So we have a lot more part-time jobs versus
Yep.
full-time jobs. Me personally, I don't see as an issue, but I'm looking at it from a stock market investment standpoint. Tell us what I guess, long-term implications or the issues are with growing short-term jobs versus long-term jobs.
So with short-term jobs, obviously you don't get a lot of the same stability as a as a full-time job. So full-time jobs, 40 hours a week, you're getting benefits. There's things that help people in the day-to-day. Um, Now, part-time job, you're not going to get benefits. You're going to be fighting for hours, whether or not you're going to be working a full 30 or it's off and on how much you're going to get. So there's not a lot of stability, and that mentally messes with the consumer and what they can afford and what they can do. So a lot of them will pull back on their spending because of that. But I think a lot of these part-time jobs that we're seeing created are people who have full-time jobs taking on second, third, fourth jobs to be able to afford. There was an article that I just read the other day. A Gen Zer and millennials splurge now is groceries.
Mm,
When the media is making fun of or making light of a situation, there's an underlying problem there. And if Gen Zers and millennials truly believe that groceries are a splurge, um, we've got some pretty big issues at hand. So I think the problem with part-time jobs is it does not create enough stability for those people working those jobs, and again, those also come with easier terms for firing, letting go, cutting hours. So I think you're going to see a big pullback in spending eventually. I mean, that's the other part about this, man. You couple that with the trillions of dollars in credit card debt that's
Mhm.
been rising for the last year. Eventually, people are going to run out of credit, and when they run out of credit and they don't have the money, what are they going to do?
They're gonna cut their spending. They're gonna cut their spending. Okay. Now, let me throw a little spin on this, right?
Yeah,
And it might be a generational thing, something I'm seeing is I don't have a regular job. I don't have benefits. There is a rise of corporate benefits where you could just buy them. There's
yeah,
websites, there's apps where you can now buy benefits. And I think there's a secular shift for those millennials, for those Gen Zers to just
definitely.
buy the benefits. Even healthcare. I get all these ads for healthcare because I'm all into health. And it's like, hey, you don't need a doctor, nothing. Just for $99 a month, you can come in and get scanned and get your blood taken. So I see the rise of that. And I'm thinking, well, maybe this is kind of absorbing a lot of that lost demand in the long-term jobs. Also have friends. I'm like, hey, dude, go get a job at UPS. Go get, benefits. And they're like, no, I'm making more money doing Uber, Lyft. So they're making the money. There's just the instability because they get fired. It's more stress to some degree. I can see that. But I think there's a secular shift here too. So that's why I'm like unsure on it. I don't know. Is it good? Is it bad? I don't know. But what I do know, what I do believe is there's a shift going on in how people behave when it
Oh
comes
yeah,
to employment. There's
and
definitely a
and yeah,
shift.
when they work, how they work, what they're gonna, they're willing to take on. It's a huge shift. I mean, you and I talked about this. I think almost one of the first episodes we even hopped on one of these. We talked about how the jobs numbers don't reflect truly what's going on in the jobs market because they're not getting that underlying data. The gig workers. But I'll tell you right now, if the IRS is not collecting enough in taxes because people have moved away from the W-2 employee jobs where their taxes are taking out. The IRS is going to come for those gig workers some way, somehow. There's been lots of rumors about different things that they're willing to put into the tax code, they're willing to put into law to really push people out of the gig work economy
Really.
and become employees because, again, they can't track the income, and we've already told them we don't want them in our bank accounts.
Right.
So there is an issue there where they've got to they've got to get their revenue, and if people aren't willing to go into the workforce and work as a W-2 employee because they make more as a gig worker, well, if you're making more, the IRS then knows. If you're willing to say I make more, the IRS knows that you should be paying taxes on that. So how do we track? How do we know what taxes they should be paying, and how do we collect those taxes? So they're going to start looking for ways to build in tax codes and laws that will grab those gig workers and that extra money that you're making because you're not paying taxes on it. Because at the end of the day, if you're not paying taxes on it, Uncle Sam and IRS aren't going to be happy about it.
Right. That could be the reason why they're implementing all these. We're going to track every transaction, remove cash from the system because they could see the secular trend
Yep.
happening where it's like less, we're making more money on the side, right? A lot of these big tech companies, Uber, Lyft, Google, whatever it is, they're not W-2s. They're more so 1099, right? Is that
Yep.
they're more
1099.
1099. So they
Yeah, that's
want to,
because you're going to get the 1099 report or the 1099 form at the end of the year. Then you have to file your taxes with it.
right. So I see what I guess my prediction would be they crack down on cash. A lot of people are upset about that. Most people don't even use cash anyway. Let's keep it real. Most of you guys don't be using cash. You guys be using
Yeah, but they're not necessarily going to crack down on cash. They're going to crack down on your actual transactions in your bank account because you may not be using cash, but you are using Cash App, Venmo,
right.
Zelle. Your bank accounts are still, your debit cards. All those things are still moving money. They're going to be cracking down on that, not necessarily cash, because
Right.
I mean, who nobody really uses cash anymore, like you said.
Although, hey, did you see that California bank that got robbed 30 million? I was like, hey, that's funny because you think 30 million's a lot until you see what the Fed printed. I was talking to somebody yesterday. I was like, they're like 30
Ooh,
million. That's insane. I'm like, look, check this out. Here's the
that's not even a
ratio.
fraction of what
The
the Fed printed.
the Fed printed last March the equivalent. Watch here, I got it right here. The chart. This was that injection. This is what I think we have if something does fail. Giant injection. 30 million. They injected 10,000, no, 100,000 times more than that. 500 billion
Yeah.
is, I think, almost 200,000 times more money. So that was pennies. And it's just crazy because nobody can really tell how much money that is. If you put that in ones, it'd be like 68,000 pounds. So the Fed's money is like the size of a city
Yeah.
almost, like 500 billion. So whole point is the Fed got your back if you're in assets. The Fed's gonna get your back because they're here for the baby boomer generation. They're not gonna let their. I was talking to a dude in the gym. He was like, he's all pissed off because the stock market goes up and down. He's like, yeah, well, that's my wealth. And so they're, the Fed's gonna pander to them, just like you said, they're gonna pander to them. But going back to the transaction thing, yeah, I think they did say 2025 is when they would start removing coins and stuff and try to get rid of cash so they can track you because they can't track and they need more money. Unfortunately, that's just what it is. What it is. Hopefully, crypto and blockchain comes into play and reduces that transparency or increases the transparency. Like if they're going to increase transparency on us, we need transparency on what they're spending on because I think that's the real disconnect. Where's your money actually going, right? Are you contributing to infrastructure? You were talking about this the other day. We're spending on stupid policies. Instead, it should be bridges, roads. Like we compare to China. China has way nicer infrastructure than the US does,
It's
right?
because they spend most of what they spend as far as the government on
Yeah.
building infrastructure. I mean, and well, don't get me wrong. Let's not use China as the gleaming example of how to build infrastructure. They have mega cities that are ghost towns
Right. True.
because they overbuilt and basically a giant Ponzi scheme for the construction and the homes and the buildings that they built. But at the end of the day, they were focused on real estate and infrastructure, building it out. And I think we've spent so much money and energy on things that aren't improving the way of life for the US population that I think the government needs to go back to. Because I mean, think about this, right? If the government actually started spending money on building better roads, better bridges, more infrastructure as far as, travel and, what we deal with on a daily basis, not only are you putting the money back into it for us, but you're also creating jobs for people who can work those jobs. And so instead of making more bureaucracy, new three-letter agency that cracks down on guns, you build, you start a new transportation division where they're building roads throughout the United States. Those roads are being built by U.S the US population. Those people are earning money from the government. Yes, they're government jobs and it's more government spending, but that's money being invested into actual people who can then use that money to spend to keep the economy going instead of some of these other things that they're doing.
Yeah, and okay, so that does make sense. Here's my outlook on that a little bit, and I want you to just give me your feedback real quick. I think the government is actually kind of worried about the central banks or the US. The US as a whole is a little more worried about falling behind other economies. And if there's one thing that keeps your economy strong, it is superior technology,
Oh,
superior
definitely.
military, right? That's how you keep the dollar strong.
Well, yeah, no, no. I mean, you and I have talked about this before, right?
Right.
The only reason the US dollar is the predominant currency in the world is because of our military. Our military backs the US dollar because we don't have any commodity backing it. So
Right.
that if as long as we have a strong military, the US dollar is going to stay strong.
Right. And I think that's the trade-off is we're not building infrastructure. And so that hurts, the US economy, the way of life for some degree, maybe even crime increases, but we keep the dollar on top. And they're also spending on chips, right? A lot of chips for AI. So I think the trade-off the government is saying, this could be the positive outlook, is they're looking, hey, we won't survive if we don't spend here. We won't survive into the future. So we can spend on infrastructure later. Now, maybe they should just give that to, they should make incentives for corporations to build infrastructure instead of them. Who knows?
100% agree.
They
Yeah,
suck
right? I
at
mean,
efficiency.
builders, right?
Yeah.
Start incentivizing builders to build high density residential, cheaper housing. Give them the chance to, be subsidized by the government to encourage affordability in the housing market. There's lots of things they could do there. Yeah, no, I totally agree.
100%. Now, this is the controversial one right here. We're looking at a chart that shows the labor force
Mhm.
growth. Okay,
Yep.
they didn't use illegal or legal immigration here, but what we're
No.
seeing is foreign born entities, and I'm just kidding, people are have been dominating the labor force since December. So December, January, February, March. So most of the labor force is coming from
across the
immigration,
border.
or the southern border. Do you take that as a positive or a negative net? Is this a net negative or a net positive?
Well, first off, it's only good for inflation because it's giving us cheaper labor, which should drive down costs as long as the producers of those goods are willing to, not raise prices that much more. So
Right.
I think that's good as far as inflationary pressures. Um, it's hard for the average American who's out of work, looking for a job, needing to work, being replaced by somebody not from this country. That's a tough pill to swallow, and that is a more of a mental thing than it is, a physical good or bad. But I mean, this is not the first time something like this has happened. We've been through ebbs and flows in our economy where we've encouraged um, immigration to bring in a cheaper labor force to replace a more expensive labor force. Um, and as long as the government isn't intervening and stepping in and setting minimum wages that don't help with that, this should be a positive for the economy. It's just not going to be good politically.
Right. Okay. Um Now, is it that they're stealing, as they say, American jobs? Maybe they are to some degree. Maybe that's what's happening.
To some
Or
degree, right? They're
yeah,
just taking the jobs that Americans aren't willing to work. I
how?
mean,
Yeah, that's what I was gonna say. How much of it is?
that's
Yeah, how much of it is that?
typically what it is. But you got to remember, there's a lot of immigrants who were here before
Hmm.
that were working those jobs, and they're still working those jobs. They're looking at it from a standpoint that we came in here legally, we were here first. Now we're not. Now we're not important. You're bringing in more. There's just, like I said, first come. You're the first one in. You want it to be about you, not about somebody else. And so as they replace people in the workforce or bring in additional workforce, the optics of it are negative to the American people. Doesn't mean that it's actually negative to the economy, but most Americans aren't 100% worried about the economy. They're worried about themselves
Right.
because we are a selfish society. You know what I mean?
That's so true. Everybody looks at themselves. I'm like, hey, this is a net positive for productivity, but it doesn't mean your wallet's going higher, right? So invest in
Exactly.
stocks. No, I'm just kidding. But yeah, that is true. People are more concerned about themselves, and they feel a little more fearful. And it's like, okay, if you own a company, this, construction company, I have a
This is
couple dudes,
great.
they're great because they're like, hey,
Yeah.
well, our labor costs are the biggest things,
And
that we
so that's
worry
going to
about.
drive up their profit margins.
Right. Profit margins go higher. So okay. What was the next thing on that? Yeah, I guess that's kind of the issue here, is it doesn't
And
feel
I
good
think you
for.
asked me earlier about the housing sentiment, right?
Yeah,
Why are
right.
builders so happy about or
Oh
excited
yeah.
about building? Think about that, right? You just brought in a much cheaper labor force for them to build their homes. So they're looking
Mm,
at, we were already cutting some of our profits on these homes because we were having to give incentives to get people to buy them and affordability. Well, now you just gave us a giant workforce to be able to build these homes for less, increasing our profit margins. So maybe they can offset the incentives with the cheaper labor force. I mean, that could be another factor in why builders' sentiment has gone up as well.
no, that makes sense. One of the downsides to the immigration increasing productivity, so maybe in one sector the economy is strengthening, but shelter costs have to go up to some degree because you're putting
Right? Because there's
net
less housing.
right.
Yeah,
So then
we
the
already
home
have a
builders,
shortage.
right. So the home builders are literally saying, "Oh, we can build for cheaper and prices go
More.
up, we can sell for more."
Yeah.
Okay, that makes sense. Putting the puzzle pieces together.
Yeah.
Okay, putting the puzzle pieces together. All right. Now how about let me see. So do you think the Fed is, go back to the Fed a little bit. Is the Fed political? I go back and forth on this. I'm like, they're not political, they're increasing rates. And now what did Biden say the other day? We will get a rate cut. We will get a rate cut, right? I mean,
Yeah. I mean, well, how much, can you trust what Biden's going to say? And I'm not saying this from a political standpoint. I'm just saying he said a lot of things
yeah,
that really haven't come to fruition. And again, the Federal Reserve is not a political entity. They are supposed to be separate from, our politicians and the president. So
right.
their policies are supposed to be centered around, job stability and inflation. So the only way we see again, the only way we see a rate cut is inflation continues or starts to come back down. Because again, they said they wouldn't do any rate cuts until they saw a nominal rate of 2% on inflation as an average. We haven't even hit 2% at any point in this whole time frame. So averaging 2% is out of the question before a rate cut if they plan on cutting rates this year.
Right.
And then you've got the stability in the job market. Um, it's not crashing
Mhm.
and it's not growing exponentially, but it's trudging along. So they have met half of their mandate. Um, but if we see the jobs numbers start screwing up, then they've got to step in and do something, which is where you see the rate cuts come in.
Okay. All right. How does this sound? I'm going to tell you my scenario. I think we see April, May slow because here's what I'm guessing. A lot of consumption happened December, January. I think we thought it would slow in February. It did not. I found myself spending more again. Stocks went up. I was like, hey, let me buy a couple more coffees here. Starbucks is getting my money. March for other than oil prices going up, other than shelter going up. March was spring break, and college kids love to spend that free money from from their loans. So let's go party, right? They don't care. Grandparents visiting their children, visiting for spring break, right? They have kids. Let's go here, let's go there. But I think March, April is going to be dead. Everybody's studying for finals. People just spent for 3 months. Their credit cards are up. My guess is they slow down consumption in April, May, not much going on. They're saving for the summer travel. And I think inflation ticks back down. The forward-looking indicators for prices are coming down on the service side, which is 70% of the economy. Manufacturing is actually picking up. I just didn't show that chart because it doesn't fit my narrative. No, I'm just kidding.
Mm,
The prices have been low for manufacturing for a while anyway. I'm not too worried about it. We'll see if it spikes. But services are coming down. And I guess if we don't get down by June, we could be in trouble. Also, if Biden is orchestrating some type of deal with the Middle
the
East or
Fed.
OPEC. Yeah, I think he needs to get oil prices down. We can't do no more, right? Our SPR is already. We need to refill that. So my guess is sometime in the summer, some event is coming. Something is coming. Something might break in the Fed. The Fed did mention it. So I think summertime, or maybe this is the correction. It looks like we are starting to roll over a little more technically on the stock market. We roll over. The Fed tries to cut or at least re-accelerate the Fed balance sheet this summertime. And then second half of the year strong. Now that could change. Everything is confusing. We get consumer prices up, PPIs down. All we do know is this: corporations are profiting. They're still profiting.
Yeah.
So that would be my play out. Maybe we cut in July, is what they say. Powell was weird this last meeting. He said, "When we say sooner, we mean sooner." So I think something is going on. I don't know where it's at. I don't know what's happening, but I am seeing a lot of these real estate guys come to me and say, "Hey, what about that crypto?" So I'm thinking they're probably hurting. They could be hurting.
They
He's
are,
like,
bro. Trust me.
they're hurting. Okay, okay.
Yeah.
I'm like, hey, I'll trade you my crypto gains for your real estate. Just let's price that down a little bit. I'll buy some of that real estate.
There you go.
Um, so we'll see how things
Diversify.
we'll see how things play out here. Okay. WrestleMania. Did you watch WrestleMania? I guess that's a big thing now. WrestleMania is coming back.
Really? No, I didn't get a
WWE.
chance to watch
It
it.
was the second most watched thing outside of Super Bowl.
No way.
Um, yeah. So now for some reason this narrative's coming back. I think I know why it is. It's a bunch of dudes buff fighting violence, and they're
The
bringing in,
arena.
yeah, they're bringing in TikTokers. They're bringing in, well, not TikTokers, they're bringing in streamers. So they're trying to get gambling. I don't know, but I thought that was interesting. I'm not really too into it. It brought me back from my early days when I was like 12 years old watching The Rock. Used to love The Rock.
Yep.
He'd be talking smack and all that. So I guess that's coming back. How does that affect the economy? I don't know. People are going to those events. They're spending. They're still spending on those events.
Yeah, and I mean, like I said, as soon as the consumer runs out of credit, we
Yeah.
are going to see a huge pullback in the economy. When that happens, I don't know. Like I told you, we expect when interest rates drop for mortgages. There's going to be a huge flood of people looking to tap into that equity to pay off their credit card debt. But that hasn't happened, and it really isn't happening anytime soon because of interest rates. But eventually, you're either going to have to bite the bullet, take the higher interest rate, and take out the cash out to be able to pay off the credit card debt, or you're going to have
Mhm.
to stop spending. So that's where the kind of the trade-off here is. And we're talking about homeowners. Even what about the people that don't own, people that are renting? They're still amassing credit card debt. They're taking on second, third jobs.
Right.
Eventually, you're going to see something stop, break, crack, and there will be that reversal. But I would have guessed it would have started to happen a lot sooner than it already has, or it will. But I think I was talking. I felt like the Fed cut wouldn't come until after mid-year, maybe before the election. But I'm still not sure that they're going to cut rates until. eh, Well, I don't even. I know that they're going to cut rates this year because they said they would.
Yeah.
But I wouldn't be shocked if it was a one cut at the end of the year.
Mhm.
Um, and that's just because they want to keep their the veil that they're honest and straightforward about what their plans are.
Yeah, I think anybody who says they kinda know it's gonna happen is full of it. I think the best explanation is we really don't know. Like, that's where I'm at. I'm like, "Look, this is a tough." Oh, I didn't see that comment. This is a tough way a tough market, not market, but it's tough to guess what the Fed is doing. What we do know is a lot of the economy and profits are rising still for the stock market, but for the economy, it's such mixed signals back and there's so many mixed signals. Is the Fed going to remain independent? Well, they kind of have been, but now it's like, well, if inflation is ticking up and this trend continues, and they're going to cut, unless they have some other data. I think they do, but I don't know. The thing is, I have no clue. I'm looking at these forward-looking indicators, and the White House has to do some type of deal with one of these Arab countries. Maybe it's Iran. I don't know what it is, but something has to give to get these energy prices down. Somebody, oh, you know what I saw? The fastest growing economy. Check this out. Fastest growing economy is Guyana. They're
Yeah.
growing
Oh yeah,
se-
yeah, yeah. Well, because of their the
o-
minerals and the natural
oil.
resources they have under there, it's off the chain.
Yeah. So now Venezuela is trying
They want to
to.
start a war. They
Yes.
want to they
Yeah.
want to take it over. There was a huge report on it where they were talking about how Venezuela has been amassing troops to invade Guyana to take over their natural resources because they're so rich in natural resources. But yeah, I mean,
And what is
there's
the
so
And what is the US known for? Going into other countries, flipping the
and
script, and getting us
yep,
their resources to some degree.
getting
So,
us what we need.
yeah, exactly. So I think something is stirring up. And yeah, we probably do. People can't keep spending, but I wouldn't doubt at the end of the year either. Biden's like, we're gonna forgive all credit card debt. No, I was kidding. He's gonna try to with your tax money. We're gonna
Yeah,
take
yeah,
your
yeah.
taxes and we're gonna pay off your credit. So the taxpayers are really just
Yeah, but you know
paying
what?
off.
Let's be honest. Our taxpayer dollars don't pay for nearly everything that they spend money on because they don't get enough tax revenue to do that.
Right.
Most of it's just them borrowing more money.
Yeah, they're paying way too much. I think the Fed's gonna have to cut. So let me get through some of these comments. There's not
Yeah.
too many of them. Has ever in history been a time where interest rates high and housing market high?
Yeah, I mean, relatively, right?
Yeah,
So the 80s, um, people were sticker shocked by the prices of those homes, $50,000,
right.
$30,000. They were sticker shocked for those, and interest rates were 13, 14%.
Hmm.
Um, it's hard to compare to any of those because when you talk about a house price, buying a house for 20 grand or 30 grand, when now the median home price is 440 grand, no, I mean, nobody's really ever had to deal with something like this. Um, but you got to look at it from, inflation, um, and home prices were really low after 2010, way below what they should have been because of the crash. And so we're above where we should be on the trend line for housing prices, not as much as a lot of people think, but we
Hmm.
are slightly priced above where we should be on, the slope, right? So where it was headed. It just, you got them cheap after 2010, 2009, because of what happened in the crash. And those got gobbled up quick, right? And the other part about this is, again, they stopped building homes after that crash. And we have a housing shortage. I've been saying it since 2012 when we were talking about the housing market. Until they solve the housing shortage, home prices are not going to come down.
And I think they have a shared interest in keeping the shortage going because I mean, really, if you do the deep dive into crypto and into Bitcoin, you realize, and I say that because that's kind of what drew me in. This is a Ponzi scheme. The the central bank in the U.S. is a Ponzi scheme. But what are you going to do about it? What are you going to do? Complain you got to own assets. They're going to keep
You got to
pumping
own
housing
assets.
prices. They're going to keep pumping stock market. They're going to keep pumping crypto. They don't directly buy crypto, but that is why Bitcoin's going higher because they have no clue. They have no other playbook but to create more money, to debase the currency, to spend on this, spend on that. So I mean, what are you going to do? Prices are probably not going to come down too much. Maybe in your little region, I just say, hey, crypto is going to grow much faster than the housing prices, so get the crypto cycle, then sell, then go buy a house before it continues to go higher. I don't know. But anyways, yeah, that's just it's a giant Ponzi scheme. So USCIS has been issuing a lot of work permits to asylum seekers. They're heavily backlogged. So at least we got enough workers coming in. The real issue is we don't have a whole lot of high skilled workers. Where that's our
Yep.
educational system. Educational
Well,
system
yeah. I
takes
mean, the labor force is going to be more of the lower skilled jobs.
right.
But we've had a problem with that in the United States without, the immigration.
Right.
You ask a lot of these major corporations, what they want or what they need is they need they need more high skilled workers,
Hmm.
because our education system is failing to create those skilled workers to take those jobs that they're creating. So, a lot of people are having to come in entry level jobs, learn how to do the skill that was needed for the job that they were hopefully hiring for, or they're hiring from other countries to bring them in for
Right.
the skilled work. So, if you're thinking about your future, really invest in a skill set, some sort of work skill that will make you, high in demand, which will bring up your wages. I mean, that is how the economy works. And I think this has been an underlying problem in the US economy for years and years and years, is just a lack of skilled workers
Hmm.
for the jobs that we create.
Right. So go be a trader. No, I'm just kidding. That's a hard, you're gonna lose money. We need better skills, right? Education's not working. I quit as a teacher. Not I didn't just quit. I was just like, look, we're not teaching these kids what they need to know, right? We need more leaders. We need more fathers in the homes. We need incentives to get fathers in the homes to have better families. We need incentive teach the kids math, teach the kids how to read, not how to create some art. We need more higher skills so they can earn into the future. We need to create more things, and we're not doing that. So I was trying to teach the kids to invest. I'm like, look, well, if you don't, get a better skill set, at least learn how to invest early when you're like 12. Try to invest in S&P. Obviously you're not going to learn everything, but invest somewhere because the Ponzi scheme's only going to go higher. So invest somewhere. That's the only advice I had. That's why I went on this journey to, where do we invest? What is where do these kids invest now? What do they do? They're screwed. So you got to do somewhere, get better skills, start investing, start somewhere. Robinhood's becoming a super app. Now they have a Roth, they have an IRA, traditional. They have 3% credit card. Check that out. 3% on every purchase. Josh, 3%. Pretty good. Even though most people are going to take the rest of that and just, buy more things. Invest your money. Find a way to invest it. Come down, get your skills up, whatever you can do. How's the consumer savings looking like? I don't know. And I heard, is it bad? Is it pretty bad? Consumer
Yeah.
saving? Okay.
Yeah.
But I also hear that when the savings rate comes down, that's also a reflection of spending.
Yep.
So it's not necessarily bad today or in the next 3 months, but
It's
it
bad for the future.
but it's bad for the future. Okay.
Right. Again, you run out of money in the bank, you run out of credit card, you stop spending.
Unless they're taking their savings and they're buying Bitcoin. They're buying crypto. You're just transferring the wealth. Yeah. Okay. We are business as usual for as long as people can still complain about inflation. I'll be worried when they complain about losing their house or car. Yeah, true.
Yeah.
A lot of
But you
people.
got to remember the car repos are spiking. Um, but we're not seeing an influx of home foreclosures. But the car repo market has started to increase quite a bit.
Hey, hit me up if you want to buy a car. Um, at the end of this cycle, I'm looking to buy a Tesla. So my car, I'll give you a discount. No, I'm just kidding. We'll see. We'll see what happens. But yeah, I guess that is. Oh, I wanted to mention too. There's another war in Africa, North Africa. There's a war going on. They're kicking out the French,
Uh-huh.
and there's I guess in is
Another
it
country kicking out the French.
yeah, they're yeah, they're kicking out Napoleon, after 200 years, they're kicking out the French because they're realizing they're getting scammed. France is
Yeah,
only
of course,
there.
France is just stripping them of everything that they have.
Exactly. So France is stripping them. Now you have the caliphate coming in from the north, ISIS coming in.
Ooh,
And
yep.
the thing is, France was defending them from the caliphate. So now
Hmm.
Russia's stepping in saying, hey, we'll defend you. We'll get your resources. So Russia's coming in. And I think that's why Russia got attacked. That's part of my
Yeah, they're
theory
pulling
why
the playbook. They're pulling the playbook out of the United States. That's what we do.
that's what we do. One of the African countries has the second biggest what do they call for nuclear energy? What is it? Uranium, second biggest
Uranium.
uranium mines. And I was like, that's what they're after. They're
Yep.
after these uranium mines, and it's always about that. Niger, there you go. Bukosi, yeah, Niger, there you
Niger.
go.
Yeah, yeah.
Niger, yeah. So there's a resource. There's some crazy resource. It's like a board game. Everybody's going after these resources. Blah blah blah. So Africa is in. I don't want to say it's in shambles. It's just a lot's going on over there, and I'm like, well, why don't we see that on the news? We're not hearing about the actual other wars. We just hear about what affects the new. What's good for the politicians, what's good for the media, but we're not hearing. Okay, what is actually the health of the geopolitics right now in other countries? How can we get things more stabilized? We're not hearing about that. So
Yeah, you're not gonna see the media covering anything in Africa. They haven't for the last 50 or
ever.
60 years. And it amazes me that the US has spent so much time and energy in the Middle East
Hmm.
when if they were looking to, exploit countries and nations, Africa is probably one of the richest in resources, and labor. Yet they've not done anything to exploit Africa. But France has been willing to take it on. Now Russia. So I mean, I think the fact that there's been a lack of a U.S. presence there, I think, is what keeps the media from really talking about it. Um, but yeah, I mean, colonialism has been a big issue for a long time.
he said he said Russia's the one starting it. I actually don't know who's starting it. All I know is that three-prong war going on.
Yeah,
But yeah,
those
no, you're
proxy wars are all over the place.
all over the place. You got to do your deep dives all over the place. So it would be scary if energy goes up. I think that's our worst case scenario, right? Oil just jumps to like 100. What do you say? What do you make granting companies like Intel and other billions to invest in chip manufacturing in the US? Jervine, I'll tell you this. I'm in Phoenix, and I'm pretty sure we're the city who's benefiting the most from these policies because Taiwan invested like 40 billion, then another 6 billion. It's a total of like 70 billion foreign investment into chip manufacturing here in the US. Here in Phoenix, and that is to avert any type of Taiwan invasion of China. So now they're going to move their plants here. Now those plants haven't started yet, but the growth is growing here. They had to actually stop the housing supply. Ooh, whoopity do. They had to slow down the housing supply. And that was because there's not enough water. So I'm like, dang, dude, problem on top of problem. And so Phoenix is growing quick. I mean, I'm seeing people that are not from here, a lot of them that are not from here, moving in. So that's pretty interesting. It's kind of nice. So Phoenix is wide. We just need more water. If we had enough water, we'd be okay.
That
There's
place
this,
is nuts. I was just there like 3 weeks ago.
uh-huh.
And it's amazing there. There's so much going on there.
So much. There's things everywhere. There's so much going on. A lot of businesses don't even know what they're doing. They're just like handed this money. Hey, start a childcare center. They have no clue what they're doing. It's all over the place. So we need some leadership here in Phoenix if you guys want to move. Um,
We need some
Anyways,
water storage in the U.S. is what we need.
we do need water storage. I saw California. That Israel is trying to build one of those salutation
Yeah,
plants in
the ones that
Mexico.
will take the salt water, turn it into regular water.
Fresh water,
Yeah.
yeah, but they're afraid to build it because they have to go to Mexico, and so they're kind of, the US is or I think it's Arizona's like, "I don't know if we wanna invest in that." That's kinda tricky because the pipelines have to go, under
in
Mexico.
Mexico, through Mexico.
Right.
And
And
yeah.
that becomes like a threat, like, oh, we're gonna cut your pipelines if who knows.
Well,
So
I mean, here's the deal, right? So we talk about, relying so much on other countries for building things that we need.
mhm,
Why aren't we willing to build these things in the United States? We have plenty of land, we have plenty of ways and means to make it happen, but we won't mine, we won't uh, drill too much, we won't build more dams, and a lot of it's over the environment.
mhm,
But at the end of the day, if we're not building that kind of infrastructure here in the United States and we're relying on getting it from somewhere else, we then have to be involved in proxy wars and be involved as the world police. If we actually built a lot of this stuff here in the United States, it would avoid a lot of the outside conflict messing with our economy, messing with our troops, messing with our elections. So I think it was in California. They just did the largest dam removal in U.S. history, and it was to help the salmon spawning up there near the border with
yeah,
Washington. And turns out the removal
mhm.
killed more salmon than the dams were preventing the spawning because of all of the toxins that were released into the water because of the dam removal.
That is government planning right there. That is when you let a second grader decide how the economy should work because of how they feel. I
We
have
spent we spent billions removing dams that were water
mhm,
storage that the state of California and much of the West needs more
right,
of,
mhm.
so that we could help the salmon spawn better and get back to their natural habitat to spawn. And yet we killed more salmon than would have not made it to the spawning place because of those dams, because of the toxins and the all the things that were actually in the concrete and what was used to make those dams. It killed off more salmon than it saved.
So we hurt the food supply. No wonder my dang salmon is so expensive.
Yeah.
We hurt this food supply and lost money at the same time. This
Yep.
dude, this is
And
ridiculous.
cut down on our water storage. So here comes another drought.
Here comes another drought. There's another one too, Colorado. One of my friends owns a vape shop, and he said that there's more restrictions on the flavor of vapes that he can invest in, but yet it is free to provide heroin in San Francisco. And he was like, or
Yeah,
in Denver,
California, baby.
my
You
bad,
can't
in
have
Denver.
menthol. No menthol.
Yeah, no menthol, but we can do heroin. Makes
Yeah.
no sense.
Nah.
So this is insane. This is why, again, I hope the blockchain narrative plays out where there's full transparency on what we're voting on. We don't need to vote for a single person. All the baby boomers get mad. They're like, "What do you mean we need to vote?" No, we need to be voting on the policies with
That
logic
person's.
and
Yep.
reason, not freaking. You stop getting so wound up in,
Getting
dude.
played.
You're getting propaganda is the number one tool
Yes.
for all
Woo.
nations, for all
Woo.
intelligence agencies. Propaganda is
Yep.
the number one weapon.
Yep.
It is the
And
number one
they're
weapon.
using it against their people. We are being sold a bill of lies constantly by our politicians, our media, to get us to stay in line with what they
Right,
want us to do.
right. So yeah, that's why we're here to try to make a dent in some more accurate information because yeah, it's a bunch of bull crap out there. Well, I think we got all the
You got your
comments.
points covered.
Do you have Telegram groups? No, I don't. Yeah, I think I got all my topics covered. There's a dip in Chainlink. Go ahead and buy the Chainlink dip. No, I'm just kidding. Hey, well, thanks, Josh, for we'll do this again. We'll get another update. Seems like the housing market just keeps getting stuck, but maybe May, June, we'll see something actually move. Thanks for coming on. I'm gonna show these guys the markets after
Get
we're
some
done here.
technical work done, bro.
We're gonna do some technicals. Thank you again. Have a good weekend, Josh.
Yeah,
We'll catch
thanks,
you later.
Jeremy. Talk to you later,
Thank
man.
you for sure. All right, what up, Hassan? We'll do some technicals here. Let me throw on the charts. And then flip this around for you guys on TikTok. Okay, we'll do a quick. Need to get a little bathroom break, and then we'll jump on the charts. We got the dollar spiking. What do we say? If the dollar breaks out, okay, if the dollar breaks this level, that is a signal of risk off. And here we go. Dollar breaking out, risk off. Dollar breaking out. This is why we do it. This is why I give you the signals, the macro signals. It is literally the least watched. It's the least watched content when I create it, the macro signals. Nobody wants to watch that because it makes you think. But it is the thing that gives you the signal. So the macro is breaking out. Oil almost there. Rates also broke out. So something is going on. Who knows what it is? Something's going on. Yields are a little weak there. S&P could be moving sideways. Let's go to, so this is our levels. This is levels I have right here. We'll go ahead and look at S&P levels. I'm looking at anchored VWAP. And what I see is, okay, so we broke that level, that previous low. So I think we're going to come down to the trend. We still have a trend here, though. I didn't see it. Did I buy a lot of Link? I bought about 500 Link on that dip. I got it. I got most of it under 15. I bought about 500, most of it under 15. Also have Cooler Technology earnings. Let's see, how do they do? I think they missed by 4 cents. I'm watching Cooler Technology. This thing is literally up about 300%. You know, we talked about it yesterday. This is it. Big spike. Look at, we're telling you guys about it here. I said this is very risky, small position. Boom, exploded. So I took some of the profits and I bought some more Chainlink on the dip. Got lucky. But back to the S&P. I think we have some trend support here. We should have some trend support here. Let me see. What is this? Around 504. Maybe we'll come back to 5,000. And I'm looking at this anchored VWAP here. And yeah, I'd say like 505. We broke through that level. So maybe 505. We'll see how it goes on. This was the previous resistance. Let's go ahead and draw that resistance real quick. All right. So I think this was this is our previous resistance. So I'm going to go ahead and key. I think we get into this. I think we're looking at this right now. I think we're looking at this. And let's say we move sideways for a while. Okay. Let's go to June. Let's go to May. Maybe May. Let's go to the end of May. This could be what we're looking at here. Let's turn this like white. There we go. All right. So could be moving sideways for a while. That'd be good for accumulation. I think that takes us higher for sure. You did buy a lot of Chainlink. Look, Chainlink's only getting better. The revenues are picking up. You can see them on Dune.com. Look at Chainlink revenues on Dune. And that's the data. And, it's getting better. They're made another partnership. So far, they have a partnership with ARK Invest. Actually they're using the proof of reserves computation. So you can see the reserves in real time. And I think the narrative is strengthening versus all the other narratives. I sold all my TQQQ today. Is that a leveraged NASDAQ position, or is that the inverse? I'm not sure. I don't remember. TQ is either leveraged or it's reverse. Base price was 20, sold it at 59. Okay, yeah, that must have been the leveraged one, obviously. Yeah, that had to have been the leveraged one. Yeah, that's the leveraged one. Okay. All right, Asan. Well, hey, here you go, Asan. You got Chainlink dipping. I don't know where it's at. Chainlink is dipping a little bit. Bitcoin didn't dip too much. So yeah, we got that going on. All right, so yeah, that's S&P. I mean, there's not too much. Let's throw on that 50-day or 50-week moving average. See where momentum's at. So you got the 50-day. There's a possibility we come back down here. But you would definitely have to have something bad happen. I think it's more realistic that we come to 475 at the lowest, maybe 475. Yeah, 475. That'd be a nasty dip. I'd be a little more cautious. Let's wait and see what happens. We finally have a correction playing itself out. Let's see what happens. All right. I think it really comes down to oil. Are we going to get a breakout in oil? We haven't had it yet. 3 times leverage. Yeah, that's what I thought. I thought it was 3 times. Can you look at MACD weekly on TQQQQ? The MACD. I don't even use MACD. Let's see. I had it on there, but I just don't use it. I don't use it very much. Let's see. Oh, I see what you're looking at. You're getting that bearish divergence here, and you have the MACD starting to turn over. Good call there. RSI is also moving over. This is on the weekly, by the way. This is the weekly. We could be slipping under that 10 EMA. Huh. Okay. MACD. What do we look like back here? Yeah, I mean the MACD shows we're into a correction. This last correction was what, August, September, and then mid-October. So let's go ahead and say that if we do get a correction here, we could be looking at a correction all the way into June. It doesn't look that big, does it? It doesn't look that bad. So maybe all the way into June. You never know. I am not sure. I'm staying day by day, week by week, because there's a very strong macro. Anything can happen at this point. Anything can happen, but I guess if we do get a correction, it's very possible we come down here. Let's just go. Let's do this. TQQQ. We're still holding the uptrend. Okay, keep that in mind for the Qs. Here's that first point. Here's that second point. So it would only make sense if we did get a nasty pullback, we come back into the trend. Keep that in mind. We got a trend. I mean, you can't really give a number on it, but you have a trend support right here. We definitely have trend support. Look at what happened in the past. Yep, I saw that. Turned red on the weekly. Yep. Definitely turned red on the weekly. He's talking about this. Let's not remove RSI. Let's go back to that weekly. Here's what he's talking about. Last time we turned red on the MACD, we had a nasty correction. No, it wasn't that. Was it really that nasty? Was it that bad, or was it just did it just feel bad? This is where I was super bullish too. I was like, hey, Santa Claus rally. Things are lining up. What is this? 11% correction? Let's do 11%. Let's see if we got like a 10%. 10% will put us at like 400. And we do have earnings also. Maybe Fibonacci from the correction to the low, correction low to the all-time high to look for a balanced area. Let's try that. Let's see if I even know how to do this. See if I know what you're talking about here. Okay, Fibonacci retracement. Let's see, maybe Fibonacci correction to I don't really know how to draw Fibonacci retracements, to be honest with you. Is it like this? Is this how we're drawing it? I usually look at it a different way. Maybe this is it. I guess that takes us back to that previous high. I guess that takes us back to the previous high. 385. Okay. All right, I'll start doing that. I never do that. I never measure it that way. But yeah, that'd be a nasty rip. Okay. I like to use anchored VWAP. I kind of like to use anchored VWAP in trends. I guess Fibonacci, I need to get a little more into it. Look at the levels if you double click it. All right, well, let's see. Oh, is this what you're talking about? Number 249. This might, but I'm over here trying to learn. It's a guessing tool. Yeah, it's a guessing tool. Well, let's try the anchored VWAP. Let's use that, and then let's throw on anchored VWAP. See where we could possibly come back to. I'm gonna use this one. So this is a little higher. This anchored VWAP's higher. Let's get rid of this. This one's a little higher. Let's come back to the actual low. Let's come to this low. Ooh, that's nasty. Actually, let me pull this up to right here. This is the March correction. That looks a little better. All right, so yeah, I'm gonna say if we get a nasty correction, we come back to this previous resistance around 386 for the Qs. You can look at that same resistance on the SPY, SPX, whatever it is. If it's not too bad, we just come into the trend. All right, we just come into the trend. Definitely, we could definitely get a trend break and a move sideways all the way into the summer. All right, what is our signals for that? Well, let's see the VIX of VIX. Is the volatility of VIX starting to pick up? This is VIX volatility. It's not that high. How about the VIX itself? We had a spike in the VIX. That could have been the bottom. That could have marked the bottom right there. Who knows? Let's go to obviously let's go to the dollar. Dollar breaking out. Okay. That was a quick move also. That was a pretty quick move on the dollar. That's a risk off. That is risk off right there. So I am a little risk off. We're at that next we're at a previous level. What is this? 106. Not good. This is not good, guys. I mean, I'm not saying sell everything, but this is definitely not constructive. It's definitely a headwind to markets. It's definitely a headwind to markets. And then next, what I did see is credit. Oh, let's go to those credit spreads. Let's go to credit spreads, internals. We got to go to internals. And then we're going to go to the move index. So this is bond volatility, not good. This is the biggest move in bonds since September 2023. Okay, bond volatility. What this tells us is the spread or the premium to, the premiums just jumped. The premium for what? The premium to own US Treasuries. So Treasury buyers are saying, hey, we want more premium if we're going to hold these Treasuries because the risk of holding them is climbing. Not good. That is volatility right there. Bond market volatility or lending and borrowing volatility. Not good. We don't want to see that climb. Let's go to the next one. We have credit spreads. Oh, these are not climbing though. This is signaling. So as it goes down, look at this is actually better if we invert it. Let's do an inversion. Here we go. It just makes more sense this way. So this is confidence in equities. Confidence in equities versus US Treasuries. If confidence continues to climb, then credit spreads are actually the shortening. And what that means is financial conditions are easing. So this is giving us a different signal. This is why I'm so confused. No signal. Maybe it just means that people are gonna, if inflation does ramp up, we go into reflation, and it's more likely we see stocks who can benefit from inflation go up. Who are those stocks? Well, let me go to some of the basket I'm looking at. In play stocks. In play. Okay, number one. Wait, what? Oh, this is inverted. I was gonna say what? Progressive insurance. We know insurance is climbing like a rock. Sorry, I said that analogy backwards. It's like falling like a rock. Progressive had a nice pullback. Insurance is climbing. I mean, my auto insurance was up tremendously. So insurance, Progressive ticker symbol PGR. That's what I'm looking at. Am I going to buy it? Probably not, because I rather buy the dip in crypto. But if you're interested in a hedge and you're very low risk, well, Progressive should continue to higher if we get inflation. Ooh, I like this. I like this. This is a Deere company for infrastructure. So this could be a nice infrastructure play. Hedge against infrastructure. Or no, hedge for infrastructure spending. Maybe we got to pull back on Caterpillar, not sure. What about energy? Chevron. Chevron is breaking this. So if oil continues higher, well, Chevron will continue higher. And they pay dividends and their cash flows are ridiculous. So this could be a nice hedge also. Am I interested? Not specifically. Maybe I get a call option. I might think about it. Maybe I should hedge myself. Maybe I should hedge and get a call option. January 2021, just in case. So, Chevron, something to look at. I got PayPal. This is not going to do well, though, if we get inflation. This is not the hedge. Team, eh. Cybersecurity, Hood, whatever. Tesla. I got out of my Tesla call today. Okay, I thought it was gonna break out. We didn't break out. I lost like $83. Nothing big, small. Hopefully we can retest this 160. Carbides 160. Tesla had a spike after market hour. Oh, it had a spike. Let me see. I didn't even see that. Oh no, cooler is tanking. I should have sold more. TSLA. All right. Let's see. Do we get a spike after hours for Tesla? I guess a small little spike. We'll see what's going on there. So it looks like cooler might be coming down. We'll see how it ends up in the morning. Very small market cap. I got to go to the earnings and check that out, see what happened on the earnings. Anyways, I'm about done here. All right. Just we did the housing market, did a little update on the technicals. We could be in correction zone, right? We could be in the correction zone. Let me throw this on. I got to get used to this presentation style. We could be looking at a correction. All right. Let me throw on a. Here we go. What up, TikTok? Everybody wants to see the charts. All right. So, number one, inflation's up a lot. So the market could be pushing back rate cuts to July, right? We're not getting a rate cut. We got to push that back. If we push back rate cuts, what are we doing? We're literally saying, okay, there's not going to be enough release or enough relief for the market, right? Interest rates are going to be higher chance of something breaking in the real estate market, in the banking sector. Not the S&P though. We're not talking about S&P. S&P is not going to sell off that hard. Maybe your individual stocks will because they're a lot more sensitive. But the Mag 7, they're earning more yield on their cash than they have to pay in debt. So they're, not too worried about that. But for sure, it looks like yields are getting pushed back. I'm sorry, rate cuts are getting pushed back. If that's the case, we get closer to something breaking, but underlying growth, manufacturing is picking up. So my best case scenario here is that we do get a correction. Remember, we've been saying correction in March didn't happen. Now we're in April. Tax filing correction, April 15th. We have about 3 days. Monday's their last day to file for taxes, right? So I think people are going to sell off. Maybe we have some downside for another 14 days going into May. We'll see how things play out. We have more CPI reports. We have more employment reports. Best case scenario is that the employment market slows down a bit. Okay, if we get employment, dang, cooler is tanking. If we get employment cool off, unemployment ticks up, and we get those reports, 2 weeks, then rates should come back down. But right now, dollar is spiking. Okay, dollar is spiking. So if we get rates come down, we have the market easing a bit, stocks can catch a bid and at least find a base, right? In the macro, find a base. Oil's not breaking out yet. It's right at the breakout point, but it's not breaking out yet. Once we get to 88, if we get to 88, 90 oil, not good. Not good. Dollar's going higher. Rates are going higher. Not good. Okay, so keep a lookout for that. I'm buying the crypto dip. And this is the last thing I'm going to say. Second half of the year, Joe Biden keeps printing money, free money. Here it comes, whatever sector it is. The Fed's going to find a reason to cut rates, more money. Credit's going to increase, more money. And the best beneficiary of more money is going to be risk assets. Crypto is the best performing asset. So you know me, I'm in crypto. I'll show you my position later, right? I'm going to wait till the position gets to about who knows, 150%, who knows. So I think crypto is going much higher. And biggest risk here is, I think our biggest risk is that oil just breaks out. It's been the same risk as always. Oil continues to break out and causes some type of geopolitical. Oh, no, not oil. It's not energy prices. You know what it is? Supply chains breaking. That would be the issue. Supply chains breaking is the issue because that's a systemic issue. Oil can spike and come back down, right? It always happens. It happened in 1973, Yom Kippur War. It happened in 2008. It actually spiked before it came down. And oil can come back down because it'll slow down consumer demand. But if you get the supply chains ripping, if you get supply chains breaking because of the Red Sea conflict, because of Iran and Israel, that is the real systemic issue because now supply chains, like that is bad. Supply chains slow down, they get backed up, prices go higher systemically. Those don't just come back down right away. That's our biggest issue here. Iran-Israel conflict could cause oil spike. It could. April and the whole May might be a correction window. And look, take this with a grain of salt. April and May correction is good. It is good for markets. If we get April and May correcting, the big buyers, a lot of big buyers who never got in, who got left behind, right, from the rapture. And I'm just kidding. Those who got left behind from the market just going vertical all year, they're going to come back down and buy because the underlying macro is strong. Let's look at those damn charts. Okay, you guys can't see them on TikTok. Okay, underlying macro. First of all, if something breaks, boom, credit comes back into the system. This was March and April of 2023 when we had a banking crisis. Boom, more liquidity. Fed steps in. Okay, number two, the lags of inflation, right? I'm sorry, the forward-looking inflation are coming down. CPI should come down unless we get another geopolitical uncertainty. Then we're in trouble. All right. That is just the global shipping prices. Look that up. Go to world global shipping prices. Keep your eye on that. If they start to pop, not good news. For the most part, the reason I say this correction is good, the business cycle is starting to pick up. That means expansion. We're looking at an expansion period of expansion here. We're seeing productivity climb the way it did in the 90s. We're seeing labor costs fall. We're seeing productivity pick up. That's good. Liquidity is king. As long as liquidity continues, momentum continues to pick up. Europe's about to cut rates. Markets go higher. Profits, corporate profits moving higher. A lot of good stuff. Now, if we look at the actual historic data, last 2 months, last 3 years, I'm sorry, since the pandemic, April is usually negative. May is kind of flat. And June is kind of negative. So what does this tell us? It tells us that April is expected to be weak. So buy the dip. Not financial advice. I am not advocating for any type of investments. You know what I'm doing? I'm buying more Chainlink because there's a big narrative. There's a mega trend in infrastructure, financial infrastructure. I'm buying more Chainlink. Do what you want to do. Good luck. Good luck with money. The world is not all about money, but it makes the world go round, right? We need a strong economy. Either way, eat healthy, live long, good relationships, lift weights, stay positive, stay blessed, and I'll catch you guys next time. Thank you for joining, and check out the newsletter. Don't forget to like and subscribe. Check out the newsletter. Got the business cycle stuff in there, and I am still working on the course to try to get, put this in simple terms so that you can invest in your own future, so that you have the education to think through the business cycle yourself, so that you don't have to rely on one person for economic news, so that you can read the news for yourself, so you can read the data and make your own decisions, right? To enhance your ability to invest. That's what I'm doing here. I haven't sold one product yet, right? Other than the newsletter, that's nothing. So when that comes, I'm going to sell it because I've been working on this for 7 months and I think it's going to find value. I think you guys will find value in it. Okay. I think you will find value, and I'm not trying to trick anybody. If you're not interested, you're not interested. It's not for beginners, but I will be working on the beginner one. Either way, let's see if this correction plays out. I think we have a couple months, and crypto's your best bet here, in my view. We'll put that to the test by this summer, crypto summer. We'll put that to the test. All right, guys, stay blessed. Thank you.